Hello, everyone, and welcome back to the SkyBridge Bitcoin Review. Just a reminder, if you haven't watched the show before, my name is John DARSIE. I'm a Director of Business Development here at SkyBridge, joined every week by usually one of our managing partners, and then also oftentimes by a special guest. On this show, what we do, we like to break down what we think are the biggest stories in the world of Bitcoin from the previous week, as well as make it very interactive and answer your questions. So again, just a reminder, there's a Q&A box at the bottom of your video screen on Zoom. If you have any questions for our host or our guest today, please submit them to that Q&A box, and we'll try to fit them in this sort of 30, 35-minute show is generally where we like to keep it. But as I mentioned, we often have somebody from SkyBridge as well as a special guest, and that's the case today. I'm joined by Brett Messing, who's the President and Chief Operating Officer here at SkyBridge, and as we like to say, our Bitcoin maximalist in chief, as well as Tom JESSOP, who is the head of Fidelity Digital Assets, one of the first movers in the Bitcoin space in terms of building out a digital asset division within that storied company. And then, I think it's a great place to start this week, Brett and Tom. We'll let Tom introduce himself first, but to talk about what Fidelity is doing, not just their decision to be an early mover in the space, but more recently, reports about Fidelity potentially growing its team on the digital asset side of the business. But first, Tom, I just want you to introduce yourself briefly, your role, your history in the industry, and things like that for our audience.
Sure. Thank you, John, and thank you, Brett, for having me. So I'm Tom JESSOP. I've been at Fidelity for about a little over 3 years. I currently run the digital asset business at Fidelity, which has really two parts. One is a nascent asset management business, which we launched in September of last year. And the core business is effectively a brokerage and custody platform for institutions, which we announced in 2018, and we onboarded our first client in early 2019. Prior to Fidelity, I had done a brief stint at a crypto startup called Chain. And prior to that, I'd spent a lot of time at Goldman Sachs in our strategic investments team, investing in really capital markets, infrastructure, and fintech before the term fintech was applied to tech companies focused on finance. So my journey started probably in 14 or 15, looking at the space, getting very interested. Our first crypto investment at Goldman in 15 was in Circle. I know he's been in the news recently. We were a participant in their Series B financing. And that's really where I got very interested and quite passionate about the space. It's obviously was a big part of my life and focus then, and it's my exclusive focus now. So thank you so much for having me. And John, would you like me to dive into the news?
So let's start with that news. So as I mentioned, Fidelity, by creating the digital assets unit, was one of the first organizations to really put a flag in the ground that we're going to be involved on the custody side in different parts of this crypto business. It's Bitcoin, but it's well beyond that. It's sort of building new financial infrastructure. But there were a lot of reports out this week that Fidelity Digital Assets plans to grow its team by as much as 70% to meet demand that you're experiencing from clients, from partners. We have the horse here, so we'd love to hear it from the horse's mouth. Are those reports true? Are you guys hiring aggressively? And if so, why?
Yeah, we have been, and we're taking sort of the next big step in our evolution. So maybe just to provide your audience with a little bit of a timeline, Fidelity's got a very rich history of R&D in the technology space. What I mean by that is basic tech R&D. Like right now, we're looking at quantum computing and the impact on portfolio construction and risk management. But several years ago, it was blockchain. And I think we had a view then, which has been confirmed repeatedly over time, that this is a transformational technology for financial services. And our first foray into the space was really to deliver an institutional quality solution for investors that wanted to transact and hold Bitcoin. As the market's grown and we've seen growth in our business, we want to expand the capability to a wider range of assets. Think about other points of integration with the broader Fidelity organization, as we're seeing demand from many client segments that Fidelity currently serves. And then importantly, given that this is a 24/7 market and, quite frankly, looks a lot different to other asset classes, maybe save foreign exchange, having the ability to support customer activity around the clock in multiple jurisdictions is an important part of, kind of the next step in our evolution. So obviously that hiring is very focused on technology professionals. We've got development centers in places like Dublin and Boston, Raleigh, Durham, North Carolina. So we are fairly broad in terms of where we're looking for talent. And maybe a plug for Fidelity. I've been here 3 years. It's a great organization, private company, very committed to this space. And I think we can, offer very compelling career paths for folks that want to come in and be part of the digital asset journey within a big traditional institution.
Yeah, and I know before I asked Brett his opinion on the implications of that news and Fidelity's continued growth, for us, we did a lot of research and evaluation of the crypto space as a potential investment avenue at SkyBridge in the 2017, 2018 period. As Fidelity continued to build out its digital assets division and the infrastructure within the industry grew with an entrant of a company like Fidelity, it allowed us to, a couple of years later, finally make that leap into the space. The fact that counterparties and service providers and partners in the space like Fidelity exist, gave us and our clients and our partners the confidence that we needed to make that move. So just wanted to put that part in. But Brett, what do you think the implications of the fact that a company like Fidelity, which is always sort of on the new frontier of technology, but what are the implications of the fact that despite what we're seeing as sort of a pullback in the price of Bitcoin, you're seeing an organization like Fidelity hiring so aggressively into their digital assets division?
Well, first of all, I want to dismiss the idea that we're in a pullback. Like, this is a bear market, okay? Like, it's a bear market. It has all the bearings of a bear market. We had a 50% decline. Volumes are light. Volumes on options are light. Our participants today are light. You know what I mean? It's this is what bear markets feel like. Now, everything happens in a sped up time frame. So the bear market could be over by August or September, but this does not feel like, again, I've been doing this for a while, as does Tom, this does not feel like a correction. It feels like a bear market. And I think that's what makes what Tom and Fidelity are doing so important. And I do just want to add to what you were saying, John. We're customers of Fidelity for our Bitcoin fund. They hold most of our Bitcoin. And I would say Fidelity being in the custody business was a but for. I mean, there were two events that enabled us to get into the business. One was being able to custody, the Bitcoin at Fidelity with that trusted name. And, Paul Tudor Jones coming out so publicly gave us sort of air cover in a way that I don't think we would have had before that. But Tom, we are in this period where I think people are frozen. I mean, we're seeing it. I mean, Anthony wouldn't want me to admit this, but, flows into our fund have ground to a halt. There's just a level of sort of malaise in the marketplace. And so, great businesses invest at this time. But I guess, are you seeing something different?
No, Brett, I agree with everything you've said about the bear market and, just kind of a fairly negative environment in terms of sentiment and just a lot of moving parts, whether it's the discussion around, hash rate drop, miners moving out of China, all of these things, where macro, rate sensitivity, if rates go up, what happens to Bitcoin? Is Bitcoin an inflation hedge? So I think that, we are building and investing for the long term. When we started this business, the thesis was around the technology and the enablement of existing Fidelity businesses and the creation of new ones. And I think that thesis is still intact. And we, try not to over-index on price. We tend to look at other indicators or indicia of interest. We look at what's going on, whether it's venture money coming into the space, developments in DeFi, the broadening of the clients who are coming to us asking about the space. When we first started this business, it was, fairly sophisticated investors such as SkyBridge and others. And now we're seeing a lot more interest. And so we try to look at this broader set of facts around where things are going and not over-index too much on the price. The favorite analog to me is, at one point, and you might know the exact number, Amazon in 2000 or 2001 at the bottom was a single-digit stock price. That didn't mean that the internet or e-commerce or other things were foregone. It was just growing pains, the need for broader adoption, the need for better technology. And I think we look across the ecosystem and we see a lot of things to be positive about, current market environment notwithstanding. And by the way, as you know, we've seen this environment in Bitcoin frequently over the past 3 to 5 years, right? These massive runs and then these significant drawdowns, consolidation, and then things usually pick up again. So it's a bit gut-wrenching if you're new to the space, but if you've been here for a while, It's an unfortunate pattern, but one that, what do they say about history? It rhymes, whatever. But anyway,
right.
That's how we think about it.
So Tom, one of the things that we've experienced, and I don't think we're alone in this, is tremendous amount of interest, really low conversion. And I think, like going back to, let's say, the MicroStrategy conference, right, in early February, which was great, right? There was a lot of, heat and excitement coming out of that, and the idea that, it would take these institutions several months, but we probably start seeing adoption now. We certainly have a nice entry price, I think, certainly relative to where Bitcoin was in the spring. I guess, are you seeing anything different than that? And what do you think it'll take to get people to go from, I'm really interested, I'm taking it seriously, I'm putting in the time, but nah, I'm not buying it. So it feels like that's where we are. At least a large cohort exists in that stage I just described.
Yeah, I think it really depends on the client segment. I mean, I think that if you take maybe some of the more traditional clients and maybe take corporates as an example, we've spoken to a number of them, and generally speaking, fairly risk averse, trying to figure out in terms of rates or other macro conditions what it means for their cash balances and how they deploy those. And I think also, how to think about these assets in a broader portfolio construct, right? So, people have done analysis of equity portfolios with a Bitcoin allocation or 60-40. If you're a corporate treasurer, how do you think about the role of Bitcoin in a portfolio of, liquid fixed income, short-term securities? Like, is there a role, or is it a balance sheet investment, et cetera? So I think there's still a lot of education that needs to happen. I also think, the second issue is probably around implementation, right? Because I think that for many investors, there are potential challenges with owning the assets directly. They're intangible, long-lived assets, so they have certain negative implications for the balance sheet and valuation of assets. So it then becomes a question: am I buying a fund? Am I buying directly? And perhaps in this environment, people just kind of put pens down and say, I'll wait until things perk up again. It's not a burning platform issue at this point. So it's sort of the mirror image, I think, of what we saw at the turn of the year with the price running up and just almost the manic intensity of people wanting to be onboarded. We're seeing sort of the inverse of that. And a big part of our value proposition is education. Fidelity serves a lot of these corporate clients, as well as a lot of investing clients. And so we're doing a lot of work to bring these assets and our point of view to the client where they sit. We're not trying to evangelize about Bitcoin in one way or another, but in the context of their business or portfolio construct, trying to help educate so that when they do come around, we'll be first in line.
Well, I'm shamelessly evangelizing. Just want you to know that. But but what do you think? I mean, I guess this goes to both sort of, market conditions and your business and our business for that matter. What events, we can talk about China. I think China is just so incredibly bullish. I can't think of something more bullish that could have happened this year. And I understand that it's going to take, people don't see that initially, and it's going to take a little bit of time for that to get digested. What do you think could sort of, re-energize the market and the market participants, right? Because ultimately this is an adoption story, right? If we get adoption, we get buying, we get higher prices, and that virtuous cycle, which we were experiencing for the prior year, would get re-energized. Is there anything on the horizon that you're looking for that might,
Yeah, it's an interesting question. I think it's a little difficult to answer, but I think that the last leg up was obviously catalyzed by the pandemic and the call for monetary and fiscal stimulus and all of that, and the thesis of Bitcoin as a scarce asset. I think now it's a little more challenging because you've got this confluence of, call it, negative news, right? We certainly see more concern or questions from investors about ESG, which again, for more traditional investors is something perhaps they think about more than, a more risk on or more, let's say, markets oriented type of investor. I agree with you that the movement of mining out of China is probably one of the longer term, most bullish things that could be happening for the ecosystem. But again, and maybe it's education, I think that's perhaps perceived as though the hash rate's dropping, that creates some negative impact on the network. So therefore, I'm going to wait to see what happens there. I don't understand it. And honestly, I can't tell you what is the thing that's going to turn this around. It may just be a lot of these issues kind of being tamped down or addressed, and the animal forces pick up again, and suddenly we're moving in a more positive direction.
Tom, you brought up the ESG issue, which Elon Musk brought a spotlight on him, and while he did it inelegantly, I think he actually did the community a service, because I think the inevitability of green Bitcoin mining, it's going to happen faster. But I'll break a little bit of news here, although I might have in a prior episode. We're actually going to we are buying some carbon credits to offset, the Bitcoin we own, and we will be announcing that in early April. Today, the Winklevosses came out, and they're doing something that we had looked into actually with a professor at the University of Chicago, Climate Evolved. Is that something that Fidelity would look, or are you considering providing some type of option where someone could be a customer of yours and green their Bitcoin concurrently if ESG is important to them?
It's not something we're doing currently. It is something I think we would absolutely consider. I think a lot of our focus has been, again, around trying to educate and dispel some of these misconceptions, and then obviously recognize the places where the ecosystem is not, call it, doing a great job in terms of consumption. So that's really been our angle. But I think we would consider something that gives investors the ability to effectively eliminate that as a concern.
Right.
It seems like a fairly viable approach.
No, it would be great. I'd encourage you to do that, because we've gone through the process. It's not super hard, but there's a fair amount of elbow grease and time that goes into it. If someone had an off-the-shelf solution, it would have been we probably would have done it months ago. We sort of had to figure it out. John, I feel like I've taken you out of the action.
No, I'm happy to be out of the equation.
Back to you.
Yeah, I'm like a referee in a sporting event. The less I'm involved, the better it is for everybody. We can hear the senior folks here discussing the issues that matter. But I want to talk about Circle. So it's serendipitous that you're joining us today, Tom, and we scheduled this weeks ago. But Circle is in the news. They recently announced that they're going to be going public via a SPAC. Values the company at about $4.5 billion. Circle, as I understand, has been through multiple iterations as a firm, but has really taken off recently in large part due to the growth of their stablecoin business, USDC. While Tether still, there's concerns about whether the reserves really back up the volume of Tether that's in circulation. They've never really had a full audit. They had a settlement with the New York Attorney General, but there's still questions and concerns that persist about Tether. Meanwhile, USDC has grown, I think, 50-fold in the last year. It's up 3,000%. Even just in 2021, there's about $25 billion in USDC in circulation. As you've watched Circle grow and evolve, what excites you about that company, and why are stablecoins so important to the growth of the ecosystem?
Yeah, so look, regarding the company, I've known Jeremy since 2015 when we invested. And the thing that actually got us quite comfortable with investing in a crypto company back then was the fact that Jeremy was very foot forward in terms of engaging regulators and really trying to bring some clarity to the emerging crypto ecosystem. Back then, the primary product was Circle Pay. It was effectively a Bitcoin wallet payment platform for remittances, so to speak. And so in some ways, Circle's coming back to its kind of initial business conception. And so I think that it's interesting to me for a couple of reasons. Number one, obviously the regulators have been making a little bit of noise about stable coins. And I think there's probably a thought experiment or philosophical argument coming up between, CBDC versus stable coin. And I think actually one of the vice chairs of the Fed sort of raised this point the other day, saying, with the appropriate amount of regulation, could stable coins be effectively a way to deliver some of the benefits of CBDC, but in a way to enlist the power of the private sector and tech entrepreneurs. And it's an interesting point of view. And I think if you then expand that circle out a bit and say, okay, well, what is the potential opportunity for a company like Circle or for stable coins more generally? Clearly, they play an important role in the crypto ecosystem from a settlement standpoint, a liquidity standpoint. But I think that, perhaps a big part of what Circle's trying to do in the future is figure out ways to deliver, better, cheaper payment and remittance capabilities to corporates. And they've, rolled out some products to that end. And that's pretty exciting. When you think about the cost of corporate remittances in large dollars going through the correspondent banking system, incredibly expensive. Contrast that to a stablecoin based settlement that settles in a matter of seconds for pennies. And so I think my guess is you'll start to see more traction in that direction, sort of balancing the crypto usage and more real world, or call it banking type applications. And I think it's very exciting. And coming full circle, I think Jeremy and team, because they have that experience dealing with the Treasury and other regulators throughout their Circle career, I think they're well positioned to be able to make some of these arguments about stablecoins on behalf of the crypto ecosystem to regulators who obviously want to really figure this out.
If we do end up getting a digital dollar that's built on sort of blockchain rails, how would it differ from a stablecoin like a USDC?
Yeah, I think it really depends on the implementation, but like fundamentally, or maybe to oversimplify, it's the difference between the Fed potentially issuing a third form of currency. You've got cash, you've got reserves, and now there's a digital asset that can be managed as part of the overall money supply, versus a framework that says, look, if you're a bank and you want to issue a stable coin, or you're a stablecoin issuer and you keep reserves in a bank, there are a set of regulations and controls that ensure that the reserves backing those stable coins, which at that point look like an IOU effectively on a bank account, are properly reserved and audited and all of that. And that's effectively what Center is looking to do, right? They do monthly attestations about assets in the portfolio against stable coins outstanding. And my guess is that if there is that decision between CBDC or stablecoin, the regulation will move more towards the verification of the underlying fiat assets and the reconciliation of the fiat assets to the issued stablecoins. I also think in the Circle story, I think it's also important to note that David Puth, who spent a long time at JP Morgan, and for many years was the CEO of CLS, which is a pretty significant part of the existing market infrastructure around FX settlement, is now running the Center organization. And so I think David is really well positioned to help Circle and others in that ecosystem begin to think about the application of stablecoins to use cases outside of crypto.
Yeah, and the fact that Circle is going to be a public company is certainly elevates the level of scrutiny that regulators will be able to put USDC under in terms of regular audits, that any public company has to undergo. And I think that was, from reading the tea leaves, that was a large motivation for wanting to go public via the SPAC, is to, subject themselves to that level of scrutiny. And you mentioned Jeremy's, the fact that he's always wanted to court regulators in a very aggressive way, whereas others in the industry are more interested in sort of disrupting old ways of regulating and building financial markets. Brad, do you have anything to add or questions about Circle and what Tom was just speaking about?
I would just use it to jump off to ask a related question to Tom, which is, the regulatory outlook presently. As I sort of feared, at least from a Bitcoin standpoint, it seems to be getting a bit politicized. Brad Sherman, I'm an Angelino, I happen to know, said a bunch of silly things at the House Financial Services Committee. Elizabeth Warren, who spent her whole career railing against banks, is doing the bidding for the large commercial banks. It almost feels like it's a knee-jerk, well, if Wyoming, Texas, and the Republican mayor of Miami like it, it must be bad. But what are your feelings about the general regulatory environment? And does it pose a risk, or is it really just noise? And we're sort of, we've reached, quote, too big to fail, at least from a Bitcoin standpoint.
Yeah, it's a good question, and I tend to this may be somewhat counterintuitive. I tend to view this as actually positive from the perspective that it's the thing that needs to be addressed. And at some point with enough attention, it will be addressed. And the hope is that it's addressed in the right way. And we as an industry need to play a part in that. For example, there's been talk about, better investor protection with exchanges and other things, which I think that any of us from a traditional financial services background think is table stakes. It's essential to growing an industry and getting these assets into the hands of investors. The question is, how do you have a fact-based discussion and depoliticize it? And that's where, we try to provide a lot of that type of education. We're now part of the Crypto Council on Innovation with a few other players in the space to try to bring that voice and engage more directly, because I still think there's a lot of bad information flying around. But something's got to be done. A simple question: if there's a desire to regulate exchanges, how do you do that when the CFTC effectively regulates certain digital asset commodities that trade on the same exchanges as things that potentially look like securities that are under the SEC's purview, right? So I think that again, I think it's noise. We shouldn't ignore it, but I think if it has the net effect of creating this this galvanizing force where we finally have discussions about how to build regulation that supports development of a nascent asset class in an industry. I mean, that's something I think we're hopeful for, with the appropriate amount of what's what I'm looking for, the appropriate caveats. But it's got to happen, and it's got to happen soon. And if this is the way it happens, then we just got to be ready to engage.
No, I agree with that. I think the government's primary concern is they want people to pay their taxes. Like I often say on our Form 1040, which we all filed this year, right? The first question after name address was, have you bought or sold cryptocurrencies, right? They never asked, have you bought or sold meth, right? Have you bought or sold, hand grenades? Yeah. So, and I do think from a political standpoint, and I'm the House Democrat here at SkyBridge. If you look at the ownership, based on polling of Bitcoin, communities of color own it at almost a 2x rate to white communities. And those,
I didn't know that.
Yeah, no, it's very interesting because they tend to have to, they've been mistreated by large institutions, by the state generally, and so the idea of, I think, a stateless money is probably more appealing. They do also play the lottery at much higher rates, also, so it might be a bit of that. Mm-hmm. But nonetheless, those are voters. And hopefully we'll see less of a knee-jerk response from the progressive community on Bitcoin because, again, I think probably, I don't want to speak for you. I know I find the possibility what Bitcoin can do for sort of financial inclusion to be, pretty inspiring.
Yeah, and there are some tremendous stories out there about, people in places like, Argentina, Nigeria, Turkey, Venezuela, where people's lives have been changed, their financial net worth has been salvaged or saved because of this non-sovereign, 24/7, easily accessible technology and value. And we should be celebrating those types of stories. Again, your POV might be different, living in a stable, established economy like the U.S., but for many people around the world, and even people in certain parts of the U.S., there is real, tangible, personal value, and we have to, I think, be a bit clear about how we talk about that and the use cases and the opportunity.
Well, I just want to say I think it's great what you guys are doing with Coinbase and Paradigm, and maybe ask your DC folks to look at those polling numbers because they might be helpful as you educate lawmakers.
Yeah,
back to you,
that's
John.
an interesting fact. I didn't know that.
Yeah. All right. I'm going to go to some audience questions. I think it's a good question in the context of the fact that we've had several hot inflation readings over the course of the last few months. And one of the narratives around Bitcoin is that it's a great inflation hedge, but we haven't really seen Bitcoin perk up on news of finally these hot inflation readings. And generally, we'll have a lot of people on this show on our Salt Talk series, and there's people assign different values to crypto. Why are they bullish on crypto? Some people are bullish on it because of central bank, monetary policy. Some people are bullish on it just from a technology standpoint that it's remaking financial infrastructure. As you look at Bitcoin and you look at crypto, why are you excited about it? Are you excited about it more, because of reckless monetary policy, or are you more excited about it, from a financial technology standpoint?
Good question. I mean, for me personally, it's a bit of both. I mean, I think I was originally attracted to the space for more the macro aspects of it. And then I quickly kind of fell in love with the more technical and social implications. And then obviously with the explosion of other protocols and everything going on in the space, you quickly realize that this is a very transformational, the potential is very transformational, and we're at a very interesting point in time where you have these macro conditions, you have a generational change in terms of how younger people think about investing in value. And all these things are coming together and creating this really interesting set of conditions where, this called potentially generational change in how we transact value could come into being. So I don't really index on one versus the other. I mean, as far as the inflation hedge is concerned, and I'd be curious to get Brett's perspective on this. I don't think that the absence of Bitcoin rallying when inflation numbers get hot is suggestive that it's not. I think it really depends on who the investors are. You have a lot of retail investors. My guess is they don't think much about Bitcoin as an inflation hedge, and the pot is off the boil because the market's not running. There may be other long-term holders that do, and while they're not adding to positions, they're not selling. So I think we probably need to go through some form of a cycle like we have with other assets to see what actually is the performance of Bitcoin or other assets in certain macro environments. But Brett, as someone who thinks about this on a more regular basis than I do, what do you think? Yeah,
I try to sort of scope out a little bit, and it seems to me that there are just from an inflation standpoint, right, there are two huge trends that are ultimately going to keep inflation under control, which is just the deflationary force of technology, right, and demographics. And maybe we run hot for a couple of years, but ultimately, I just think and my sense is we're probably somewhat close to being contemporaries. What we experienced in the 70s, just I don't see that. I see this as being a transitory thing. The other trend that I think is just irreversible is just the devaluation of currencies. And Bitcoin represents a hedge against that. You referenced earlier, people doing historical analyses of Bitcoin in a portfolio, and look, we use the tools we have. I think we're just so early on this that what's going to happen tomorrow is going to bear no relation to what happened yesterday. You know what I mean? It's if you spend time on Bitcoin Twitter, you'll see. I'm sure you get these charts where we are in the halving cycle, how long the bull market should go. And, people are making projections based on 2 data points. There was no Fidelity custody in 2017, right? There was no Michael Saylor. And we are still at a point where single actors matter, which might scare some large institutions off. But for me, as someone who sees the opportunity to make a lot of money here, that just is validating that it's early, how early it is. So, I guess the inflation is unhelpful to the extent that there are a class of investors who might be, that might freeze them from otherwise buying Bitcoin. But that to me is just short-term noise.
So we have another question in the chat from Eric, and he's asking, we talked about institutional demand. There seems to be a lot of institutions that are doing their homework, that are bullish on the story, but they're waiting maybe for regulatory clarity or potentially other factors before they really take the dive into Bitcoin. In your view, Tom, where do you think the next wave of institutional interest is going to come from? Let's say if we get greater regulatory clarity, is it from the pension system that view this as a long-term asset to guard against inflation concerns? Is it from university endowments? Is it hedge funds continuing to have deeper penetration into the market? Where do you see that institutional demand coming from, or at least the people that you guys are in dialogue with the most?
Yeah, I would hope it's from the more traditional set of investors. I think what we have seen, and I kind of referenced earlier, is the change in the composition of our client base to include more of those types of clients. And so I think what we would expect is to see broader adoption, all the segments we serve, but hopefully more increasing interest among the more traditional investor class. And they tend to take longer. They tend to look at things in the context of a broader portfolio view. When we did our survey last year and the year before, we actually did our 3rd annual survey, which we'll publish the results reasonably soon. The 2 biggest blockers for institutions are interesting, right? The first is volatility. And the second is lack of fundamental frameworks to think about valuing assets. Now, one could argue, are you taking a paradigm that you would use to value fixed income securities or equities and trying to apply that, not directly, but that same line of thinking to digital assets? Or is there a completely different set of factors and data sources that investors can tap into to have that same sense of, call it, security on making a fundamental investment decision, but where the inputs are perhaps wallet movements or on-chain activity versus corporate balance sheets. Regulation, interestingly, is not a top 3 concern. And I don't know what to attribute that to. Perhaps, like with any early stage technology or asset class, there's a view that, the cost of entry is an uncertain regulatory environment, or perhaps they see that we are making modest progress. The news out of the OCC last year on bank regulation was positive, although no, that's sort of in a state of flux. The SEC did a few things at year end around, trying to get clarity on what it meant, what qualified custody meant in a digital asset context. So, interestingly, regulation doesn't appear to be the primary concern. It's really the volatility. And if I went to my investment committee, what am I actually going to them with in terms of this is why we should be buying this specific asset?
Right. Last question we'll ask you, Tom, before we let you go, and it's from RJ in the chat. It's about why do you think Bitcoin is going through this bear market cycle? Is it purely a China story? Is it a matter of hash rate falling precipitously because of China's crackdown? So we're just going to have to work through that as hash rate continues to reemerge as mining equipment is relocated to North America or Kazakhstan or wherever it's going. Is it GBTC? All these hedge funds started making that GBTC trade, late in 2020, early 2021. That's unrolling a little bit. What are the reasons you think we're in sort of this period of malaise?
Yeah, look, I think we let's not forget, and maybe you guys can correct me, but I think Bitcoin last September, so 10 months ago was sitting around 10,000, right?
Right.
If I'm not mistaken. So, we've come very far, very fast. And so I think what you've seen is, and again, as I mentioned earlier, Bitcoin has gone through several near-death experiences, quote unquote, or significant market corrections. We're clearly in one now. And I think it's a confluence of bad news. I mean, pick your poison. Is it ESG? Is it the regulatory stuff? Is it the lockup expiry on GBTC? Is it uncertainty around China? It could be all of the above, right? I think, maybe people are looking for an excuse not to get in, and it's normal. I mean, it's maybe not what we want to see, but it's what happens in markets. So I think perhaps a little bit of positive news around regulation, or once people see, hash rate actually has been coming up again, which is pretty interesting, like literally a matter of weeks after the ban. So, we're seeing some resiliency and perhaps a bit more positive news flow, and people will feel better about getting in.
Brett, you have anything to add to that before we wrap up? I do, and remember, I was the one who at the beginning of the show said we're in a bear market. But if I had said, if the three of us spoke at the beginning of January, and I said China's going to launch a state attack on it, okay, they're going to kick out all mining, okay, it's the network's going to essentially get unplugged overnight. They're going to not even allow people to post on their equivalent of Twitter about crypto. They're going to shut off the off ramps. One, Elon Musk is going to pee all over Bitcoin and highlight the ESG issue, which, as we all know, is a real issue around the globe for investors. It's a serious issue. Mm-hmm. And every time you watch the CNBC, it seems there's another leading politician talking negatively about cryptocurrency, as Tom sort of referenced, possibly overturning things that the last comptroller did that was friendly to Bitcoin. I think that's unlikely to happen, but they're at least reviewing, prior orders. And I said to you, all those things are going to happen, and the GBTC, which you brought up, John, and Bitcoin is up, 14% for the year? You'd say there's no way, right? So yes, we're down 50% for the high, but we've taken that deluge of events, right? And, if you had bought Bitcoin at the end of the year, unplugged, and then you'd say, "Oh, wow, I'm outperforming the S&P. What's gone on?" And you'd be like, "I can't believe it's up." So I guess it all goes back to, right, it's a matter of perspective. And I'll just close by saying I do agree with you, Tom. I think what will, because I've lived through bear markets, and the way they end is they sort of sneak up on you, which is the bad news just sort of stops and you start drifting higher, and then all of a sudden you realize, hey, well, we got to 40,000. How did that happen? You know what I mean? And I think it'll be quieter. I don't think there's going to be like a triggering event. I think it'll just, it'll just sort of end with a whimper, which is fine with me.
All right. Well, Tom, it's been a
said.
pleasure to have you on the SkyBridge Bitcoin Review. Fidelity Digital Assets, a great partner. We're very happy to see you guys growing and flourishing in the space. We think having the Fidelity name and having quality people like yourself working in the industry is just a huge, huge positive for Bitcoin and just for the entire, reimagining of financial infrastructure that we're seeing with blockchain technology. But thank you again so much for joining us. We hope to see you at our physical SALT conference in September, potentially. So thanks.
Looking forward to it. But thank you both for having me. It's been a great discussion.
Thanks, Tom.
Thank you.
Bye.